Hello guys, welcome back to my trading journey. This is part 5, and in this video, we continue the same journey that started from a $90 account. As you can see, the balance has now grown to $592. And the most important thing is this, the strategy remains exactly the same. I'm still using EMA 7, EMA 20, and RSI with period 5, with the same rules, the same logic, and the same discipline. Let me briefly explain the logic again. I use EMA 7 and EMA 20 to read direction and momentum. When there is a crossover between EMA 7 and EMA 20, I can follow the direction of the crossover as long as the RSI is still in a neutral zone, meaning it is not overbought and not oversold. This tells me that momentum is still healthy and the market still has room to move. However, my approach changes when the RSI reaches extreme levels. When the RSI is below 30, the market is in an oversold condition. When the RSI is above 70, the market is in an overbought condition. In these situations, I stop following the trend and start looking for reversal opportunities. So let's continue this journey step by step until I hit $100,000. I'm taking a sell here because the RSI is already in overbought territory and price has moved too high in a short period of time. In this condition, the probability of a pullback or reversal is higher than continuation, so a sell position makes sense, even if there is an EMA crossover. I'm not following it in this case, because the crossover is happening while the market is already overbought. At extreme conditions like this, EMA signals often lose their reliability, and that's why I prefer to focus on the reversal logic. Now let's wait and see how the market reacts. All right, that's a profit. Okay, let's open the market again and look for the next setup. I'm taking a buy here because the RSI is already oversold below the 30 level, and price has moved down significantly from the candle's opening. In this situation, the market has pushed too far to the downside, so the probability of a rebound or reversal is relatively high. Now let's wait and see how the market reacts. It looks like this trade is going into a loss. That's okay. According to my money management plan, I'm going to apply a Martingale approach with a maximum of 3 total entries. The goal here is not to force the market, but to recover the previous loss if the next trade closes in profit. All right, that's a profit. Now let's open the market again and look for the next setup. I'm taking a buy here because the RSI is already in oversold territory, which tells me that the market has moved too far to the downside. Price has already made a strong downward move, and at this level, the probability of continuation is lower compared to the probability of a rebound or reversal. That's why a buy entry makes sense in this condition. If this position ends in a loss, I already have a clear money management plan, and I can apply a controlled Martingale approach. Now, we stay calm, we stick to the plan, and let's see how the market reacts. All right, this trade ended in a loss. That's okay. According to my money management plan, I'm now going to apply a Martingale entry. All right, that's a profit. Now let's open the market again and look for the next setup. I'm taking a sell here, as you can clearly see that the market is already in an overbought condition, with the RSI above the 70 level. I'm also entering this sell right at a resistance area, which increases the probability of a pullback or reversal. Now let's wait and see whether this trade gives us a profit. All right, that's a profit. I think that's enough trading for this part. There's no need to overtrade once the objective is achieved. We'll continue this trading journey tomorrow in part 6.